Guys, Bill Serrano from Pittsburgh, and again, I want to make another blue zone trading video for you, which is the Fibonacci retracement strategy. And if you go to my webpage here, sorianoblueprint.com/blue zone trading, you'll see the videos outlining the strategy. I tell you which two indicators, which two free indicators you can use. I show you how to set them up on TradingView. I show you the blue zone trading higher time frame trend bias and the fib retracement, how to draw the fib. I show you the entry model one, which is an EMA buy or sell shift. And I also show you a counter trend strategy. Now, this was initially designed to where you check the higher time frame trend using the daily and the 4 hour, and then you would take your trades on the 1 hour. And what happened was there was very, very few trades some weeks. Some weeks, sometimes you can go 1 or 2 weeks with actually no trades even going off. So that became an issue there. So I tried lowering it down, taking the trades on the 15-minute, but looking for a higher time frame trend on the 4 hour and the 1 hour, drawing the fib on the 1 hour, so forth. Still didn't really give me the results that I wanted. So, and the other thing that happened is people were getting confused by having to do the whole higher time frame trend thing. And so I wanted to make a more basic version of this strategy, just staying on the 15-minute time frame. So that's what I want to show you today. So what I did was, since now we're not really looking at any higher time frames for trend, we're just going to go to the 15-minute chart. And so using these indicators that I show you here, let me just remove the drawings here real fast, okay? So what I did now is using the EMA indicator, the DeLorean EMA indicator, which is a free indicator. On the 15-minute time frame, I have the yellow EMA, which is the 5 period, the red, which is the 13 period, and now I put a 200 on here, which is the gray line. And so the 200 can help us determine whether or not we should take the trade based on a trend, right? But what you're going to look at is when you install this Lux Algo Smart Money Concepts indicator, right? And I have it on here twice because one of the indicators does not show the order blocks, okay? So if I don't want to see the order blocks, which you could see these blue shaded areas are order blocks here. If I don't want to see that, I can shut that one off. And then I just have the structure. Right? So if I just want to see the structure real fast, what do I see when I come to the 15-minute chart? Okay, so what we want to look for are changes of character and breaks of structure. And you could see on the 15-minute, this has been trending bullish for a long period of time. You could see back here it was bearish. Then right here you got the choke or change of character where it turned to bullish, right? Then you get one break of structure, two break of structures, three break of structures, right? Four break of structures in a row. So that's a pretty strong trend up for AUDCAD, again, on the 15-minute time frame, just looking at the 15-minute time frame. And so every time you see these breaks of structure, you'll get an order block. If I turn the order block on, you can see there's an order block there for that break of structure. There's a break of structure here, and there's an order block right here, right? There's a break of structure here. There was an order block right here, right? There's a break of structure here, and there was an order block right here, and so on and so forth, right? So since I'm only showing, I think, 5 order blocks in the settings, all the order blocks that you'll see here are bullish because it's been trending upward, right? And so you need to get a change of character here to get a bearish order block to show up. So in order for to get a change of character here, we would have to get a move down below this low right here where you see an order block. If we just get a move down below here, that's not going to create a change of character. And if we get a move down below here at this time, that's not going to create a change of character either. Now, if we get a move higher, right, if price were to move higher, then we may get a new another break of structure in the new order block, and then let's just say that new order block was right here, right? Then if you get a move down past there, then you might get a change of character and an order block up there. But that's neither here or there. I'm just trying to show you when this indicator paints order blocks, it only does that after it determines there's a break of structure. And sometimes you'll see a move that looks like a break of structure, but it won't show up as such on this indicator because we only have the swing order block selected. And I show you how to set this up here in video 1 on that page. But if you just were to look here real fast to the settings, you can see under inputs that I do not, right? That's the one where you don't have the internal structure showing. But here, this one has everything on. So we don't want to see the internal structure. We only want to see the swing structure. So you can see here how I have show swing structure, show swing points, show weak, strong, weak highs and lows, and then show me the swing order blocks, 5 of them, but don't show me internal ones. I don't want to see internal ones. So we don't have any internal structure showing because that's what gets confusing, right? That's what sometimes confuses people. So we just have the swing structure showing. And so in this case right here, the first thing you would do, you come to 15-minute time frame, you say, okay, where was the last break of structure or change of character? And that was right here. And where is the order block prior to that? That's right here, right? And so we're going to use that swing low and this swing high, right, to draw our fib. Okay? And again, just like I teach you, our blue zone starts at the 78.6, okay? But what we're going to do is, just so we get advance notice, we're going to set our alerts all the time here at the 71. Okay, let's shut off this replay mode. We're going to put our alert there. We just want a crossing. We don't have to select up or down because it's going to have to cross down at this point. And so we only want it to go off once and then we don't want the alert to show up again. So that's how we do that. So price comes down to here and the alert will go off. Now, there's a couple different ways you can actually enter trades, okay? I show you that entry model 1, which is the buy or sell shift. So that means, and I'll show you that on a couple pairs, but that means once price moves into the blue zone, we then wait for that 5 EMA to cross and close above the 13 EMA. And that's our buy shift that tells us we can get in. And then we can use the most recent low before that shift as our stop loss. We can also set limit orders at the beginning of the blue zone if we want to. That's another way we can enter trades. When we do that, though, then we have to set our stop loss just outside the bottom of the blue zone here for a buy, obviously. If you were selling, it would be opposite, right? So you would set a buy limit order here at the beginning of the blue zone. And if that executed, then your stop loss would have been placed right down below the bottom of the blue zone, okay? So you have to risk a little bit more if you want to take a limit order, right? If you wait for the buy shift, then your risk can be a little bit less because you can use the low. You could put your stop loss just below the low prior to that. I'm going to show you that on this next pair here. So this is AUD JPY. Okay, and what I want to do is for right now, I want to remove all the drawings here for a second. Okay, let's get rid of, so you could say to yourself, okay, we have the internal structure showing up. We have we have the swing structure showing up and the swing order blocks. Okay, so you can see you had a break of structure. The last break of structure or choke change of character was bullish. You also see that was a bullish one. We had a change of character right here after price was in a downtrend, right? And you could see these trades that would have gone off. I'm going to show you them here in a second. JPY has quite a few here, uh, quite a few winning trades, you know, had you used this strategy. So for right now, let's go back to here. You see how you get this change of character here. So before that, price was in a downtrend, right? You see a break of structure here to the downside, another one, and then we get this change of character here. Some people just wait for these change of characters occur before they even start trading or start marking up the charts. Okay, I don't do that, but that's if I could just show you this real fast here. Let's go back to before that change of character happens. Okay, so let's go back to here. Now, right here, you'll notice, okay, prices like right here, right now, the last change of character, the last break of structure was to the downside. So you could be possibly looking to take a sell here, right? So let's see how that would work out for you. Your fib was drawn from there to there, and you're waiting for price to come back to the 78.6 to decide whether or not you want to take a sell, right? So let's just play this out here. It's going to take, I got it. Okay, so boom. What happens here? Let's just look at that real fast. Let me just take this back again a little bit more. Kind of went too fast for me. So, okay, here we go. So, oh, right there, what happened? What happened was price shot up, okay? And so if you would have had a limit order set, right, you would have got into the trade and you would have gotten stopped out. So this is why I don't necessarily like setting limit orders, okay? But if you're feeling really good about a trade and you have to go to sleep at night and you're worried about it going off during the London session, or you're going to work in the morning, you're worried about it going off during the New York session, that's a way that you could take trades, right? But you see what happens here in this case, that would have executed and then you would have lost the trade because price went right through the zone. And when it does that, the order block disappears now. Okay, there's no more highlighted section, right? And so now what happens is we get this change of character to the upside and we get a bullish order block down here. Okay, so now let's see what happens here. If we would draw our fib from there to there, now of course, as price moves up, we have to keep changing that, right? So let's just let this go for a while. Okay, and we can see here that price kind of moved up a little bit more here. So right here, price enters our blue zone, right? And so what we could do is, again, we could have set a limit order there, or we can wait for that buy shift to occur, okay? The price goes down into the blue zone. And then right about here, so we're waiting for that yellow EMA to cross and close above the red one. The yellow's the 5, the red one's the 13. That gives us our entry reason, right? So if you look here, 941936, if you look at this DeLorean EMA and these values that show up here when you hover over a particular candle, it shows you that you get a cross right there. So you could technically now take a trade at the open of this next 15-minute candle, and your stop loss just goes right down below the low prior to that shift. Okay, so remember, so right about there. So you can see this pink area is our stop loss. And again, if we would set a limit order and just execute once it hits the blue zone, we have to put that stop loss down below here, right, to protect ourselves. But you've seen how on the last example, price just went right through. That's why I like to wait for this entry here. Now, if you're a customer of our community in the company we're with, you have access to our community indicator, our custom indicator, which is the ATH enhanced RSI cross arrows. And you can see there that that gives you an entry on that candle as well, right? See that arrow right there giving you an entry, but you have to be a customer of our community to get access to that indicator. So, and that entry was one candle later, okay? So let's say we just want to go, okay, let's say we want to go up, we want to get a 2-to-1, right? So that's about a 2-to-1 right there. We risk 1% of our count to get 2 or 2% to get 4, whatever. Now let's just see what happens. Price comes back down, and then price shoots up, and you can see there that we would have won that trade. And if we set our take profit up here at the top of the fib zone, we can actually win even more, right? As price keeps going. Okay. Now what happens is when price comes up here, let's just go back here again. So right here, we're in that trade, right? That was our order block here that we were using for that blue zone. Okay. And we only want to use these particular zones one time. Okay, we only want to use them one time, right? Once we get our win, right? So we use it the one time. So now, now as we keep this going here, now we have a new order block right here. You can see this new highlighted area here show up. Okay, and let's just see what happens there. Let's see if price comes back down. It doesn't come back down. It kind of keeps going, right? Okay, just taking a little while here just to show you this. So you don't have no opportunities because price is not getting back down to your blue zone. Now you could still be in that first trade if you wanted to, but if you got out at a 1 to 2 or you got out at the top of the fib zone, there you go. Now we get another break of structure, and what do you see? You see this new order block form. There's the break of structure line. There's the new order block. So now if you were to draw your fib from this high here, from that low to that high, what happens? What do we see happens? Price comes back into the blue zone, right? So again, you could set a limit order there, set your stop loss outside the zone, take your chances, right? Or you can wait for the buy shift here to occur by waiting for that yellow line to cross above the red. Now, if you have access to our community indicator, you could have taken the trade after this indicator went off right here, right? And again, these indicators are not buy and sell signals. This is with everything else, all the confluence that I'm showing you here, right? The break of structure, the order block, the fib zone, the blue zone of that fib zone, the 78.6, and all that, okay? So let's say you're going to wait for the shift. You don't have access to the indicator. You didn't want to set the limit order because you know sometimes that limit order can go off and price can go right through, invalidate that order block, and you lose the trade, right? So right about here, it looks like that yellow line, that yellow EMA crosses and closes above the red. So that would be your entry. At the open of the next candle. Must be a news candle there as well, so you probably wouldn't take the trade. But your stop loss would go right down below the low before that shift. Okay, so you don't have to use the bottom of the blue zone. You just use that low wick right there. And you could see this is probably a news candle here because a lot of times you'll see these news candles with giant wicks both ways and a small body in the middle. Sometimes price will just move one way. or the other. Sometimes it moves both ways like that. But if we were going to set this up for another like 1 to 2, is that then we'd want to get up to about here, right? And the reason why that goes outside of our fib zone here is because we're getting in further up here. So there has to be a point where, if your entry is going to be above the 50% retracement, then you probably don't want to take the trading. Okay, because now you're getting into the premium zone and you don't want to buy at a premium, you want to sell at a premium. Okay, so but we're just under that. We're also above, price is also above this 200 EMA right here, the gray line. So let's just say we take the trade and we see what happens here. Okay, price immediately shoots right up, comes back down, and then it finishes right there. Okay, so we kind of almost got to our take profit, but not quite. And then price kind of drove back down here for the end of trading Friday. Now, just for the hell of it, this is about 8 a.m. on Friday morning. So at some point on Friday, you're probably going to want to exit this trade and before the weekend hits, and you would have exited in profit. But again, now if we would take this trade based off of our indicator right here, then that gets us in a little bit earlier. Okay. And now we have a 1 to 2. See, we would have gotten that 1 to 2 listed reward. If we would have set a limit order, got in right at the beginning of the blue zone and set our stop loss right outside of the blue zone, then we could have gotten a 1 to 3, almost 1 to 3.5 risk to reward ratio trade. Okay, so you're going to get better risk to reward by setting the limit orders, but you're going to lose a few more trades because you're not waiting for an additional confirmation once price goes into that blue zone. Okay, so that's kind of what that looks like there on AUD JPY. But let's just show you some regular pairs, how we have them set up now. You can see here that the last change of character was right here. Look for the last break of structure or change of character when you come to the 15-minute chart here. Let's turn the drawings off for a second. Here's the last change of character. It's bearish. There's an order block, a bearish order block right there. That tells you want to draw your fib from that high to where the current low is, right? There's our blue zone. We're waiting for price to come back, but we're going to actually set our alert at the 71 instead of at the beginning of the blue zone so that we get some advance notice and we can see what's going on because we want to be able to see what's going on there. We also want to be able to test this out to look at some trades to see if it makes sense to use the 71 instead of the 78.6 as our blue zone entry point. Okay, so we're going to obviously wait for price to come back to the blue zone, right? Now, it could do that, or maybe price wants to just go lower here. Now, if price goes lower, when we come to the chart and we look, what do we have to do? We have to adjust our fib now down to here. Price currently makes a new low here. Now, that didn't do that yet, but that's why every day we have to come to our charts and we kind of have to adjust our fib zone if price has made a new higher or lower low, right? So that's kind of what AUN, we have our alert set right there. AUD USD, you could see that the last change of character or break of structure was this change of character right here to the upside. We got an order block here that showed up. Price didn't get back to our blue zone, kept going up. So we have to keep adjusting our fib zone here and waiting for price to come back to the 71 and eventually to our blue zone. So our alert goes off. And let's see if I can show you another trade here. This is a trade that we would currently be in. Now, again, it didn't go off till about 1:30 in the afternoon on Friday, so you probably wouldn't take this trade at all. But just to kind of show you one more here so you get an idea of what we're doing. The last break of structure here is bearish. You could see that break of structure right there. And if you look back, you could see that you had a bullish break of structure here. Then you had the change of character, which takes you bearish. And then you had a break of structure to the downside, which is bearish. And we have this order block right here that forms once this break of structure here occurs. Okay, once that break of structure there occurs, this order block shows up. Now, once this change of character occurred right here, right, this order block right here showed up. Okay, and you can see the price comes right back up. Okay, let me just show you this real fast here because there's a couple examples of trades here. And I have trouble with my nerves in my elbow. If anybody else has that, let me know. What happens is when I have my arms bent, my hands will go numb because it's pressing on that nerve. It's the only time that happens. Once I straighten the arms out, it goes right away. So it's not like a heart issue or anything like that. It's just like some kind of nerve issue. If anyone has that, if they have some kind of ways to get rid of it, let me know. But it's basically the ulnar nerve or something that runs down your shoulder and it goes through your elbow here. And when I have my elbows bent for an extended period of time, something presses on that nerve, causes your hand and a couple of your fingers to get tingly, like they've fallen asleep, numb, so to speak. And again, once I straighten the arms out, it goes away. But if you have that issue, let me know. Curious. Anyway, if we look here, if we just go back to this, let's use replay mode again here if we can. Let's go back to this area here before we get that order block here, right? Right now we have a break of structure to the upside. We're looking here. That could have been a winning or a losing trade. We don't know, but I just want to show you because you would be looking for this pullback to here. You get a shift and then it doesn't do much, right? Once price goes through there, you get this order block right here. You can draw a fib from there to there, wait for price to come back. Right there, price comes back. Right here, we get what looks to be a shift, telling us we could probably take that trade, right? Right? Let's shut this indicator here off. So again, we don't want to get in once we get past the 50 point here, because then you start getting into the discount zone and you don't want to sell at a discount. You want to sell at a premium. The other issue to look at here is the price is currently above the 200 EMA on the 15-minute chart. So that could be a reason to maybe stay out too. But let's just see what happens. If we would take this trade, probably at the close of that candle right there and the open of the next candle. Our stop loss would go up here just above the high. We don't have to use the blue zone because we're not using a limit order, right? If we used a limit order, we would have gotten in right at the beginning of the blue zone and we would have set our stop loss up above the blue zone here, right? Would have worked out for us probably, but that's not what we're doing here. We're doing the sell shift. Price shoots right down. I didn't set that up here. Let's see, we're a 1 to 2. The 1 to 2 would be about right there. And price goes down, gives us our 1 to 2 and keeps going, right? And then it goes even lower, right? Big move down, and then it comes raging back up. So now let's look at this at the current situation here. I just showed you that trade right there. But let's just remove all these drawings and just look at this again. Now, the most current break of structure was that big move down right there. And so our order block's right there. And so now, toward the end of the day on Friday, you could have a fib drawn from there to there. And you could see the price comes back into your, this has to go up a little bit higher, right to there. Price kind of just misses the blue zone there, goes up in the blue zone there. You're probably getting an entry at the close of this candle here. And so, like I said, that's about 1:15 or 1:30 in the afternoon on Friday. But that looks like a point where you could have potentially taken a trade at the close of this candle right here. If you used our indicator, you get in probably on the same candle, right? So if you get in at the open of the next candle after that closes, and your stop loss is just above those highs there, and you're trying to get that 1 to 2. So that's what you need to happen there. So that's kind of how this looks, guys, on the 15-minute time frame. You don't have to look at any other time frame other than the 15-minute. You look for the most recent change of character or break of structure. Once you find that, you look for the order block that is associated with that change of character or break of structure. And that's how you determine which significant high or low to use to draw your fib. Once price comes back into your blue zone, which is at 78.6, you can set a limit order there and then set the stop loss outside the blue zone, right? Or you can wait to get a buy or sell shift using the 5 and 13 EMA before you take a trade. So you can wait for an additional confirmation. And that's what the buy or sell shift is, the additional confirmation. Okay. So that's the way that I would do it based on how the market's going. If you're in a market that's just trending really, really well, then you could set those limit orders at the beginning of the blue zone, and most of the time they'll work out for you. But sometimes if the market's not trending and if it's going into a consolidation, then it'll go right through those zones, and the extra confirmation, which is the buy or sell shift, keeps you out of those bad trades. Okay, any questions, guys? Drop me a note. I'm going to put this in the group here, and I'll talk to you guys again soon as I see some more stuff going off this week.